Hello everyone, and welcome to this presentation of 2 trading techniques you must have in 2015. Welcome, my name is Stephen Primo, the president and founder of Specialist Trading, and this is our very first presentation of the new year, so I want to welcome you all, see a lot of new faces as well as old attendees. Thank you for joining us today. Now, even though last year, 2014, was a relatively strong market in most of the different markets you trade, Forex, currency pairs, stocks, as well as the futures, we know a lot of people struggled tremendously to try and make ends meet, to try and actually get on course with their trading. So today we're going to share with you 2 great techniques that hopefully will get you back on track for 2015. Now, we are first and foremost an educational company. For those of you who aren't familiar with my website, we're really about teaching you how to trade. Even though we provide all of our members and our students with actual strategies and tips and techniques that I've accumulated in my 38-year career now, it's more about teaching you how to spot these things on your own. As I stated, I've been trading for 38 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those I was a specialist for Donaldson, Lufkin, and Jenrette. I've traded through just about every market environment imaginable, from the crash of '87 to the bull market that followed after that. I've traded systems, I've traded techniques, I've traded options, I've traded just about everything. And finally, I've just put together this website where all I do is teach and mentor my students all the things that have worked for me and the things that actually were able to turn my trading around, because I struggled when I first started trading as well. So we are really first and foremost an educational website. As you'll see in today's presentation, we always try to leave you with something that you can use on your own. Even if you don't decide to become a member of our family at Specialist Trading, you can still view our webinars and take some of the techniques that I share with you and use them as early as tomorrow if you'd like. So we always give you something free that you can hopefully increase your odds for success. Now, before we begin, as always, I want to ask you to take a look at our disclaimer. I'm going to show you a lot of performance results with these 2 techniques I'm going to share with you today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as you're taking a moment to view our disclaimer, I'd also like to invite you, or just actually before I invite you to become a member of our Twitter page, I'd also like to wish you all a happy new year. We wish you the best in 2015 from all of us at Specialist Trading, as well as Pro Trader Strategies. Pro Trader Strategies is our sister site. Our job at Specialist Trading is to teach and educate you, give you all the information that I've accumulated. Pro Trader Strategies, their job is to give you the best discounts, the best prices, and the best service, and putting all of this together so that you can have it up and running on your computer as early as today if you'd like. So it's a great team. We've been doing this for roughly, as I stated, for about 7 years, and I'll give you some information at the end of today's presentation where you can contact us if you have any questions. Now I'd like to invite each and every one of you to follow us on Twitter. There's our handle there at SPCLSTTRADG. Each and every day I post something new and different on our Twitter page, anywhere from daily financial wisdom to actual current signals we're in. I posted some great information using a great tool, what we think may be happening with the market and the current trend that we're in. So there's a lot of great free information on a daily basis, so I invite each and every one of you to follow us there on Twitter. All right, now before we begin, I just once again want to go over our philosophy. As I stated, we are an educational company. What we feel, our philosophy is that the reason why upwards of 80% of all traders, regardless of what time frame or market you trade, but it doesn't really matter, all traders will ultimately, 80% of all traders will ultimately lose everything. And it doesn't mean you're going to go into a drawdown or a small slump. It really means you're going to lose all of your capital that you've reserved for trading. Just from the people I've talked to this past year that are not students of ours and members of Specialist Trading, we see a lot of people still continue to struggle trading in virtually all of the markets. Our opinion is that you are lacking sound education and that you're basically just relying on someone else to tell you what to do. I mean, just think of it in your own trading. Do you rely on what someone says on some news feed, or what someone says on TV, or what someone is saying in a chat room or a trading room to tell you what to do? Or even if it's some indicator, you cannot make a decision until the indicator lines cross, or lastly, you cannot make a decision until you hear the fundamental news come out. I mean, you're basically taking yourself out of the game. And this is why we feel most traders lose. And I say this from firsthand experience because this is what I used to do. I relied on everything and anything to tell me what to do, and I had nothing to show for it after a couple of years of trading. So my mentors, who are specialists on the floor themselves, saw how much I was struggling and were able to turn my trading around to ultimately get me to become consistent. So this is what we teach and instruct all of our students. Remember, once again, even though we provide you with strategies and techniques, we are more about teaching you, giving you all of this information so that you can ultimately empower your own trading and make your own trading decisions. Okay, so this is my goal, to teach you, not to trade for you, but to teach you how to trade with the specialist edge, the same edge that was able to turn my trading around to ultimately make it consistent. All right, so let's start off with the two techniques. The first thing you have to learn about trading, it doesn't matter what market or any time frame, is that you must always be in sync with whatever market you're trading. I know you've heard this before, and I know this is Trading 101, but this is absolutely true. You know, from time to time, traders will hit these tops where they'll sell at the exact top and hit the exact bottom, and they'll have these tremendous results. But there is no consistency in that because these same traders will most likely give it all back a few trades down the road. Once again, I say this from firsthand experience because this is the way I used to trade. I'd be out of sync with the conditions, and I'd have these great, phenomenal trades where I think, boy, I just made my whole month of this one trade. And then I'd give it all back, and I'd be right back at the bottom or even in the hole. So it's more consistent if you are in sync with the market, and that's what it's really about. We want to teach our students to become consistent. We're not here to hit home runs, because I know just as many traders that hit home runs are no longer trading anymore because they've been wiped out. So the first rule is we have to be in sync with whatever market we're trading. Now, before we go into these techniques, I also want to mention that, yes, all of our presentations are recorded. So this is going to be recorded. If you have to leave early or if you have technical difficulties, you can kindly just go to Pro Trader Strategies and request a link to this recording if you have to leave early or something. Okay, so this is going to be recorded, as all our webinars are recorded. One last thing before we go into these techniques as well. I know a lot of presenters like to take questions while the presentation is unfolding. I like to treat it more like a classroom, so I want to take questions at the very end of the presentation. So please wait till the end, and then we'll reserve the last 15 minutes for any questions you may have. Okay, this won't be really long, so you'll be able to get all this information in the next 20 or 30 minutes. Okay, so we have to be in sync. Here's the only trouble with being in sync. Everyone has a different idea of how to be in sync. I mean, think of it. Ask any trader, ask any educator, go to any website. Everyone looks at something different. It can either be looking at the higher time frame to tell you what the lower time frame is doing. It can be some convoluted indicator that only they have or constructed. It can be even based off the tides of the ocean. But everybody has a different idea, and that's why it's so difficult to be in sync with the market, because there are too many techniques to follow. But let's look at this generic example right here, okay? Maybe this will explain things a little easier and make it a little simpler for you. As we look at this generic chart, we see here that most likely what traders would see is that whatever market this is, doesn't matter what market or what time frame, we've been going lower, but then we start to bottom out. So let's say that your chat room that you belong to, that you subscribe to, says, well, we've bottomed out in this market. It is time to go up. So what you want to do is step in and buy. So you jump in there and buy at the market because you want to catch the next move up, and lo and behold, by the end of the week, it's making lower lows. Or how about this scenario? You see a stock or a future or a currency pair has been going straight up, all right? And let's say your indicators or your technical tools say this is tremendously overbought. There's no way it can go higher. In fact, it's never been this high before, and it's never had these overbought conditions before. So you have to sell. And then you look at it, we've created some type of top here, a double top, and we just close in the very low, so this looks like it's going to roll over. So you want to jump in and sell. So you sell at the market, you're all excited, waiting for this thing to fall out of bed, and once again it makes new highs. Do these scenarios look familiar to anyone? Were they constant in your trading last year in 2014? I can almost guarantee you that for the majority of you they were. So how do we get in sync with the market? Because as traders, it's extremely discouraging to think that something is overbought or oversold, and we think we're going to get in sync with it and sell, and then it does the opposite, or you even buy and it goes the opposite direction. Well, here's technique number one. This is our most powerful tool that we have at Specialist Trading. We incorporate it in every technique and every strategy and every trading method that we have. And that's our buy-sell line. And I'm going to give it to you today for free. It's so simple, but it's extremely powerful. And all it is the 50-period simple moving average. All right? This was introduced to me some 30 years ago when I was trading on the floor. And at first, like most of you are probably doing right now, you're saying this is too simple, or there's no way this can work. And I resisted myself. But over time, I finally had to give in because I saw how powerful this was. And what you want to do is, regardless of what time frame, regardless of what type of trader you are, you must always have a 50-period simple moving average plotted on your chart. I don't care if you trade tick charts or if you trade weekly bars. It doesn't matter. I don't care if you trade currency pairs or if you trade stocks. It does not matter. You should have a 50-period simple moving average plotted. And here's what you're going to do. If price is above, if the majority of price is above, then you will only be looking to buy. We are in no way going to short anything if price is above the 50-period moving average. And conversely, if price is below, you will only be looking to sell. All right? There's no way you will be trying to pick a bottom if price is below the 50. Why? Because it's basically a recipe for disaster. As I stated, every once in a while it will work, but on the 10th time that you try this technique, you'll probably and most likely give everything back that you made on the previous 9 trades. So there's no consistency. Remember, we're only searching for consistency. We are not searching for home runs. So let's go back and look at this scenario again. Originally, we wanted to buy, but then whatever we were trading fell out of bed. Well, if we had just simply plotted the 50-period simple moving average, we could have asked ourselves, where is price in relation to that? Price is below. If price is below, we are in no way going to consider buying anything. So you would have saved yourself a large loss and a lot of sleepless nights. How about this scenario right here? We originally wanted to sell because some chat room or indicator told us this was way too overbought. There's no way it could go any higher. But it did, and we had a loss. All right? If we had simply applied the 50-period moving average, we would have asked ourselves, where is price in relation to that? Price is above. All right, so if price is above, the only thing we're looking for is to go long. We're not going to consider any type of picking a top if price is above. So do you see how simple this is, but extremely powerful? I've often told my students, if I was stranded on a desert isle and I was able to trade, but I can only trade with one tool, this would be it. Because this has literally kept me out of so much trouble and kept me on the right side of the market. Once again, it is not a miracle strategy. It's not a system. Simply because price is above the 50 period does not mean we're going to buy at the market, or if price is below does not mean we're going to sell. It means that we automatically know what side of the fence we're on. So if price is above, now we start looking for a setup, some type of structure to go long. We're not just going to buy at the market, but at least we know that we're only going to be looking to buy. Conversely, if price is below, we're going to look for some type of structure to sell. We are in no way going to be looking for a buy. So I don't care what someone in a trading room or a chat room tells you. If they say, boy, this is way too oversold or overbought, you've got to buy it here. It's hit all the Fibonacci support or resistance, or there's some great news coming out, you have to buy it. I don't care. Over time, this works better than anything I've seen in my 38 years. And I'm giving you this today as one of our best techniques. You can also see this working where you can apply it in one direction, and then as it switches over, then you simply change directions and start looking at it from a shorting point of view. Now, once again, it does not mean that you sell the minute it crosses over. And the rule of thumb is that you want to see anywhere from 3 to 4 or 5 closes above or below to tell you that it's okay now, that we are now in sync with that. So in other words, once we close, let's say, below right here, you wouldn't simply say, well, I better get out of my long position because we've closed below the 50 and we intraday went below it. No, you'd want to see 1, 2, 3 closes below, and this is telling you that, well, now it's most likely in a downtrend. So you would, at this point, probably exit any longs you had and start looking to go short, okay? And once we had 3 or 4 consecutive closes above, then it would be time to look for long setups. All right, so let's go back now past year and look at some of the best and worst performers in 2014 and see how this simple tool that I just shared with you could have helped you. Because I know a lot of you are probably saying, this is it? I thought it was going to be something a little bit more advanced, a little bit more complicated. It's been my experience in my 38 years of trading that what makes you consistent is exactly the opposite. The things that are the simplest actually work the best. Okay? For some reason, we've been taught that the more complicated you make your trading, the more successful you will be. And it's actually, in my opinion, the opposite. The simpler you make your trading, the more you'll get on that road to consistency. So let's look at stocks, let's look at the E-mini S&P, and let's look at the Forex markets, okay, to give you some examples of how well this tool worked. Let's start out with stocks. Now, one of the best performers of last year was Facebook, FB. All right, it was up over 40% from January 14 to December 2014. So it had a great year. If you had held this in your portfolio, the stock would have been up 41%. So this was a great stock to hold over the long term or over the past year. Now, if we look at this chart on a weekly basis, we see that at the beginning of 2014, we started out flat, but then had a really nice rally into the spring. But then after that, the stock fell out of bed and was basically right back down at the levels it had started the year at. So at this point, you would have probably been saying, well, it looks like the stock is not going to make it. Most likely, it should be sold or should be shorted. And had you sold, let's say you had this in your portfolio and sold the stock, well, you would have missed this nice run-up it had for the remainder of the year. So how would you have known to look for only buy setups or to know that Facebook on a weekly time frame was still supposed to be looked at from a long point of view? Well, all you have to do is add the 50-period moving average. In the entire year, Facebook was above the 50-period on a weekly time frame. Okay? See how simple this is. So even though we had some peaks and valleys, you're still looking at this from a long point of view. How about rig? Okay, oil drilling stock, terrible performance this year. Obviously, with the way oil and heating oil have been going this past year, the stock is down 67% in 2014. But no one knew it was going to be that bad. No one knew oil was going to fall out of bed the way it has. No one knew what the economic conditions were going to be that caused this. So if we look at the stock once again on a weekly basis, let's say you were interested and you thought that, well, the stock had been going down such as the same direction as oil had been going down since the beginning of the year up until March. So at that point, it looked like it was bottoming out. So let's say, once again, some chat room at Trading Room or some advisor you currently deal with told you that this is a good buy. It's time to buy this thing. So it looks like we bottomed out in oil, and this is a good stock to put in your portfolio. So let's say you had jumped in to go long this. Well, look what would have happened. We all know what's happened to oil in the past 6 months. How could we have stayed away from this stock, or at the very least just been on the sidelines? And if you were a more aggressive trader, how could we have looked to go short this stock? Well, you just apply the 50-period moving average. See how simple that is? And all you do is say, well, where's price in relation to that? Well, this entire year, rig has been below the 50. So there's no reason you would have even considered going long. All right. Now, as you see, here's the perfect example. We flirted with the 50-period moving average roughly in June or July, but you need 3 consecutive closes above to tell you that it's okay to look for long setups. And we were still below, so this in no way had any indication of us going long. Now, how about the S&P? All right, performance results, a fairly nice year, up 13.5% this past year, 2014. So the S&P continued to go higher. All right, if you were looking at this in your portfolio, you'd say, well, boy, this is great, but how do you trade the S&P index? Well, one of the easiest way is just to trade the E-mini S&P. So let's say you had that in your portfolio, you were trading the futures. If we look here at this weekly chart of the E-mini, you see that we had a nice run-up going into April, but then started to roll over and looked, perhaps you were looking at economic or fundamental news, and you were thinking, boy, we've been going up. We went up all last year and the year before. It's most likely going to top out. There's too many negative scenarios happening, so I think I'm going to sell. Had you sold or exited your position, you would have missed all of this for the remainder of the year. But had you simply applied the 50-period moving average, you would have known to stay long the S&P index or stay long futures if you were long them. Now, we know that it's difficult to hold futures this long, or you must have a large portfolio to be able to do that. So we can use this also on an intraday basis. I know a lot of you have probably been looking saying, well, Steve, I don't trade weekly bars. I can't apply this because I trade intraday. This can still apply for intraday. Remember, the 50-period moving average applies to any time frame and any market in any direction. So let's just look back at what happened this past week. In fact, this came out yesterday, January 6th. USA Today announced the Dow Jones Industrial Average ended down about 130 points. That was a negative 0.8% loss following yesterday's 331-point plunge. Now, investors continue to grapple with a slow start to 2015 due to sinking oil prices, political and economic troubles abroad, and some weak U.S. economic data. The Dow has now lost more than 500 points in less than 2 trading sessions. Okay, so how could we have known in advance that we shouldn't be trying to buy, the E-mini on an intraday basis? After all, the market fell out of bed. How did we know it was going to fall out of bed? Well, if we're an intraday trader, we look at this 15-minute chart here. This is from the 30th of December all the way up until yesterday, and the market went straight down. Well, all you had to do was apply a 50-period moving average. You ask yourselves, where is price in relation to that? Obviously, price has been below that this past 4 or 5 days coming into today. Now, we don't have this today. I believe today it went above it. But still, if you're an intraday trader, you're closing your position at the end of the day. And look at that. There's no way you would have lost money. There's so many traders I speak to on a daily basis that are interested in becoming students of mine say, well, Steve, I've just never had any luck. Everything I try doesn't seem to work, and I've gone to a bunch of schools and spent hundreds of thousands of dollars trying to learn and on programs. And I tell them this simple rule. I said, why don't you just use this? I'm giving you this for free. This will save you so much money and get you in sync with whatever time frame you're trading. And when they do this, their eyes just are like wide open and go like, this is too simple. I said, exactly. Because trading really is simple. It should be extremely simple. It's just ourselves that make it more complicated than it has to be. And lastly, the Forex markets. For all you currency pair traders out there, you can still use this same technique. Here's the Canadian dollar performance results for this past year, up over 50% for the year 2014. And if we look at the Canadian dollar, we see it kind of had that same scenario. It had a nice run-up going into the spring, but then fell out of bed and was right back where it started in June or July for the beginning of the year. So at this point, let's say you may have become very negative on the Canadian dollar. Let's say you were even short. But had you simply applied the 50-period moving average, you could have taken advantage of that great run-up that happened from July all the way to the end of the year. Why? Because the majority of price was above the 50-period moving average. So I've just showed you intraday charts in the E-mini, weekly charts and stocks in the Canadian dollar Forex currency pairs. Do you see how this technique can transfer over onto any market in any time frame? Now, as a homework assignment, I'm giving you a homework assignment. I told you we are an educational company, so I'm giving you a homework assignment. Don't worry, you don't have to hand it in, but this is just for your own good. And I want you to go back and look at the past trades you've had in 2014, okay? I want you to look back and most likely look back at the losers as opposed to the winners. I can almost guarantee that the majority of your losers were because you were out of sync with the simple rule. If you only had this, seen this webinar a year prior, you would have probably saved yourself a lot of sleepless nights, a lot of hiding your statements from your significant other, or a lot of just worrying about whether you're going to have enough money left in your account to trade. Why? Because you were in sync with the overall market. Okay, so go back and look at your past 10, 20 trades, however many you did, and go back and see how many trades you had were in sync with this simple tool and how many that were not in sync. All right, I can really almost guarantee that the majority of your losses were because you were out of sync. All right, so let's move on. Once again, we'll take any questions at the end of the presentation, but I want to go on to the next technique, technique number 2. And this is probably one of our most popular techniques. It's a proprietary tool we have. It's called the PET-D, or its abbreviation for the Primo Early Trend Detector. This actually was a technique I was introduced to on the floor some 30 years ago. And at the time, because we really didn't have high-speed computers or any type of programming or anything of that nature, we had to calculate this formula by hand. It didn't take a lot of time. It wasn't really difficult, but it was the type of thing where if you were trading intraday, there's no way you would have been able to keep up with a 5-minute time frame each and every bar. But now that we have high-speed computers and we have programmers, we've been able to program this into a proprietary color bar algorithm. So what we do is we color the bars, and the PET-D tells you where the short-term trend is. So if you see a series of green bars, it's basically telling you that the short-term trend is up. If you see a series of red bars, it's telling you the short-term trend is down. It's that simple. So now you just have to look at the color of the bars. So the overall trend is where price is in relation to the 50-period moving average. That's the overall trend. The short-term trend is once you've applied the PET-D. It's the color of the bar. So let me show you a great technique when using both of these, a great trading technique when using both of these applications. Here's a buy pattern. In an overall uptrend, the first green bar that occurs after a red bar is your confirmation for a buy pattern. So in other words, if we are above the 50 period, even though we don't have it displayed here, we are above the 50 period moving average, you see that now that the PET-D has colored all of these bars green. But since it's a short-term trend identifying tool, it will go into some type of red scenario, meaning that the short-term trend is down. But the overall trend is still up. Once we get our first green bar, well, that's our indication to buy. And if you want to be conservative, you can use our confirmation technique of buying once you trade above that green bar. All right? So if you just simply would have bought here on the next bar, look what happens. All right? You have the security of knowing the overall trend is up, and you have the short-term tool fine-tuning your entries. Now you can use this to go short as well, because in an overall downtrend, meaning that price is below the 50 period, the first red bar that occurs after a green bar will be your confirmation for a sell pattern. So if we look at this scenario right here, we are below the 50 period, even though you don't see it, we are below the 50. Price is red, so it's in sync. But now we have a nice bounce to the upside, so the short-term trend turned green. That's okay. We're going to ignore that and wait for the first red, which happens right here. If you want to trade conservatively, you would simply go short or sell just below here once you trade below this first red bar. And you could have shorted on the next bar, and look what happened. So do you see how this tool can get you in sync with the short term and really fine-tune your entries? So let's go back and look at these same stocks, E-mini futures, and the forex scenarios I gave you earlier. Earlier, all we did was identify the overall trend. Now we're going to use this second technique to fine-tune our entries. So let's start off with stocks once again. Here's that weekly chart of Facebook. Remember, now we know that the overall trend has been up. If you wanted to use this in your portfolio, you would simply apply the PET-D, and the colors change either green or red. As you see, we were green, all this rise up here, but then we started to sell off, and the short-term trend changed to down. But then we had our first green bar right here. So all you had to do was buy once you traded above that, and look at the nice rally that happened after that in the next 6 months. And then you had a couple of short-term scenarios here as well. All right, see how simple this is? We're not listening to any news. We're not listening to anyone in a chat room or trade room telling us that something is overbought or oversold or has met all the Fibonacci lines or all of the support and resistance levels. We're not watching TV and waiting what the next economic tool or indicator is. We don't care about those things, because those things only serve to overcomplicate our trading and make us doubt what we should be doing. All you have to listen to is the market in front of you, and it tells you just about everything you need to know. Same thing here with RIG. Now, obviously, the overall trend was down. So now we want to apply the PET-D, and you can see the bars here are red. And once we have this nice little bounce, the short-term trend turns up. So you simply wait for the first green bar, I should say the first red bar here, and this is your indication to sell. And then you had another setup here, another indication to sell. And you could have caught that nice sell-off to the downside. How about the E-mini? All right, we're still looking at the same scenarios we showed you earlier. We're above the 50 period the entire year. So all you had to do was add the PET-D. You see here that we have the majority of bars are green, but every once in a while when there's a short-term sell-off, they turn red. Well, the very first green bar that appears after red is your confirmation to buy. And look at all the buy setups you had here. Okay. Once again, we know we've been showing you weekly bars just to show you what happened last year, because we're trying to compare how this could have helped you in 2014. But if you want to look and see what happened on the short term, once again, let's look at the past 5 days. All right. The overall trend on this 15-minute chart in E-mini was down, obviously. We apply the PET D, and I know it's a little bit difficult to see here on these bars, but we apply the PET D, and the first red bar that appears after a green bar, meaning the green bar is a little bounce, short-term bounce, well, that's your sell signal. So look at all the shorting opportunities you could have had in the last 3 or 4 days here, all right? See, I just don't understand when you know these simple techniques and you apply them, how you can say, you know, you're consistently losing. You know, it's got to be something else that you're just overcomplicating your trading. If you're in sync with the overall trend and you're fine-tuning your entry, especially using the PET D, you really have this nice consistency to your trading. I'm not going to sit here and promise you that every trade works. Nothing works 100%. If that were true, then everyone would be billionaires. It's just that we're trying to look for consistency. 2 steps forward, 1 step back. How about the Forex example we shared with you and the Canadian dollar, okay? Here's a weekly chart of the Canadian dollar. Obviously, we're above the 50-period moving average, so we apply the PET D, and you can see the majority of the bars are green coming in to the spring, and then we start to turn red. That means the short-term trend has gone down, has turned down. But the first green bar we get after the short-term downtrend is our signal to enter. And you could have caught the remainder of this rally for the last portion of the year. Now, another great way to use the PET D is for long term, for people who like to just be in sync with the trend. Let's say, you know, you have a strategy that you say, well, you know what, Steve, this is fine, but the current strategy I'm using works tremendously well. I really like it a lot, so I'm happy with it, but, you know, I could use that PET D for my long-term portfolio. Okay, well, if we look here at a monthly chart of the S&P index going all the way back to 1995, some 20 years ago, we see all these peaks and valleys in the market from when the market rose in the 90s to the dot-com bubble in 2000, 2001, and then the dot-com crash that ensued after that. Then we bottomed again in 2003 all the way up to 2007, 2008. And that's when the banking and housing crisis chirped in, and then we fell out of bed again until 2009, 2010. And then we've been going straight up ever since then, all right? If we simply applied the PET D, look how it could have kept you in sync with these large moves. These are monthly bars here of the S&P index. Remember, you need 3 consecutive bars with the PET D to also tell you that the trend has changed. So even though we have a splash of red bars, let's say right here in this past 6 or 7 years, we would need at least 3 to tell us that the trend has changed. There were 2 here in 2011, but that was not enough, and we've continued to be green the entire way. So let's recap. Technique number 1, probably the most important tool we have at Specialist Trading. It's our buy-sell line. We're giving this to you because we really, once again, want to share all of our knowledge and education with you. Even if you decide not to come along with us and be a student of mine, you can still apply this to any trading strategy you have. It doesn't matter what it's based off of. I don't care if it's based off of the full moon. This will really give you that consistency you're looking for, because if price is above the 50, you should only take buy signals. If price is below the 50, you should only be taking sell signals. Never try to sell if price is above, and never try to buy if price is below. I don't care if it's a 5-minute chart or a weekly or a monthly chart. This will really help you get on track in 2015. And then our second technique was the PET D. That is a proprietary tool we have at Specialist Trading, but it's such an amazing tool. We have a great offer for you today with the PET D, all right? We want to give you this PET D. This is our Primo Early Trend Detector. We basically call it a roadmap for any market. It's a proprietary color bar algorithm, and with this special offer we're sharing with you today, we're going to be including the add-on, which you can load up to your computer charting software, and it will automatically color the bars either green or red. Now, the reason why we say this is a lifetime application is because we are seriously considering in 2015 turning the PET D into some type of licensing agreement. We have a number of hedge funds and other institutional members looking to license this, so we may have to go that route because there's so much interest in this. This is probably one of our most popular tools to date. I've been using this, like I said, for the past 30 years, but for the past 7 years, it's been a proprietary algorithm. But here's what we also want to share with you. Because this is the beginning of the year, because we want to get you on track, we also have a 2-for-1 special. Because we know a lot of you say, well, Steve, this is great, but I don't even have a trading strategy. You know, I'm new to trading, or whatever I've been trading for the past year has not worked at all. I've gone to a lot of educational seminars. I've spent thousands of dollars, and nothing seems to work. So we're throwing also in our 2-for-1 attendee special. This is Primo Strategy number 4. This is our most consistent strategy to date. This is actually probably one of our most popular strategies, where the PET D is just a trend identifier. Strategy number 4 is a viable, consistent strategy. The beauty of strategy number 4 is that it works in any market and any time frame. So if you become a member of the Strategy 4 course along with the PET D, you don't just have to say, well, Steve, I only trade stocks, or I like to trade futures plus the currency pairs, and you don't have to buy another application for those different markets. This works well on all markets. In fact, let me share with you some of the testimonials, or I'm sorry, some of the current setups that we had using Strategy 4 with the PET D. The way to apply it with Strategy 4 is as a confirmation tool. So as you see here, ADM in December generated a buy signal. There's the arrow, and that also comes, you also will get that with the Strategy number 4 course. So it generates an arrow telling you that you have a valid setup to go long. You can either enter at the end of that day or the next day or at a lower price. It's up to you, but now you have a valid setup to go long. Okay? Now, the way you apply the PET D is, if you have a buy setup, you want to see the bar green. And in ADM here, it was being confirmed as a green bar. So this gave you the confirmation to take the trade. And as you can see, it worked out rather nicely. Now, the beauty of this is that it will, at many times, keep you out of losers. If we look at this scenario here with ABX going back to September, October, excuse me, we had 2 signals, one to go long, one to go short. Now, the one to go long, the first signal, was marked in red. Remember, if we want to go long, the PET D should be confirming that by coloring the bar green. It didn't color it green. It was still in a red color, meaning that the short-term trend was down. So we don't want to buy if the short-term trend is down. So you would have bypassed that signal, and it would have been a good choice, because it most likely would have resulted in a loss. But the second signal you got was a sell signal in ABX, all right? And a sell signal should be colored red, as you see here. So basically, the PET D was confirming the sell signal, and look what happened, okay? And we're not saying you would have stayed in the trade this long. We teach you ways in which to stay in this trade this long if you'd like, but you don't have to. Remember, we're an educational company. We're not trading for you. It's up to you how much you want to take out of the ocean. If you want to take a glass of water, or if you want to get a Mack truck and fill it all up, it's up to you. How about crude oil? Once again, people have been screaming how they've gotten killed in crude oil, how oil just keeps going lower. I believe it went below $50 a barrel. We don't care. All we care is that we're in sync with the market. Now, price is below the 50, even though we don't have the 50 period marked here. Price is below the 50. As you see here, we have 3 signals generated to go short crude oil, starting in October all the way coming into December. Now, we're only going to generate, once again, a short signal if we are below the 50. So now that we're below the 50, we want to just make sure to give ourselves a little higher probability for success by having the PET D confirm it. So the PET D colored the bar red. All of these bars are red. So we're in sync with the short term as well as the overall trend, and we had some really nice trades here in crude oil. The weekly chart we showed you, the E-mini, well, look at all these buy signals. These were all buy signals generated using strategy number 4, and they're all in sync with the PET D. And lastly, you can use this with the currency pairs. Here's the British pound. As you see, all sell signals, all confirmed with the PET D, and how you could have taken advantage with all of these markets. So as you see, the strategy works in all markets in all time frames. In fact, let me share with you what some traders are saying. These are traders who came aboard with us this past year who purchased this 2-for-1 attendee special that we're going to be sharing with you today. First customer said, Steve, I am a customer of the Steve Primo product and absolutely love it. Strategy number 4 and the PET D together are making me money. Best trading investment I have ever made. That's from BI. Now, the second testimonial was actually from a client that we had, and this was posted this past week. So it's a very, very new client of ours, and said, I purchased your E-mini strategy number 4 yesterday. I reviewed the video 17 times yesterday based on your recommendation, and I was able to identify 2 excellent short entries, 100% profitable. Wow, wow, wow. First entry resulted in 3.5-point profit using a 10-minute chart. Second entry resulted in a 6.5-point profit using a 10-minute chart. So basically this trader made 10 points yesterday. Now I cannot tell you how happy these trades made me today. Finally, I can see the light at the end of the tunnel. This is beautiful. That was from JN. And then lastly, from JK, he's a Forex trader. He says, at 77 years young, I have been day trading Forex for some time. I was hanging in there with good money management, but not really making money. Since discovering you, the 50-period moving average, and using strategies 4 since September 19th, I've locked in 873 pips and have 5 open trades sitting at 631 pips, all in the market. What can I say but thank you, thank you, thank you for the education. Once again, this is an educational course. We give you the tips, the tools, and the techniques to trade, but we want to empower you so that you can do the same thing that these students and members of ours have. They've become consistent and they're learning how to trade for themselves. So, in conclusion, we're offering you, as the beginning of the year, to get your trading on track for 2015, we're offering you strategy number 4, all those strategies, signals that I just shared with you that were valid signals that our course members could have taken, as well as the PET-D, our most popular tool for identifying the short-term trend. 2-for-1 attendee special. Now, if you would have purchased this last year separately, this would have cost you close to $3,200. But we're dropping this down to all of our attendees today, down to a discounted price of $19.95. And the best thing is that payment plans are now available for anyone who isn't able to make that large sum. I realize some of you cannot come up with $19.95 in one payment. Don't worry about it. Contact the good people at Pro Trader Strategies, and they can put together a payment plan available for you so that you can, with a small deposit, you can be up and running as early as today. You get all the course rules. You can get the add-on for both Strategy 4 and the PET-D, so that the bars will change color and you'll get the arrows or the little indicators telling you when a setup has occurred. Now, if you're interested in taking advantage of this great deal, once again, to get your trading back on track in 2015, here's what you have to do. Contact the good people at Pro Trader Strategies. That's our sister site. You can email them at trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677. And as you see there in the very bottom, that is the link. If you're ready to sign up and ready to be up and running in just a matter of moments, you can copy and paste that link at the very bottom in the yellow there to your browser, and it will take you there automatically, and you can sign up. Okay? All right, I want to thank you all for waiting. I will leave this information on the screen, and I'm going to go and open up our question and answer box. Wow, I see there's a lot of questions. Okay, I'll do my best to get to all of them. I see that most of the people are asking, is this being recorded? Yes, this is. This was recorded. So there's the information in front of you. If you have to leave earlier, or if you just want to review this one more time, contact Pro Trader Strategies, email them, or call them directly. They'll send you the link. But remember, if you want to take advantage of this 2-for-1 offer, you may have to act early. I don't know how long this is going to be in the rotation. Okay, let me see here. I'll look at these questions. This comes from Dave. He says, does the 50-period moving average work on other time frames besides weekly? Yes, Dave. I think Dave had to leave early, but yes. As you saw, I used it on a 15-minute time frame, and actually today I was using it on a 1,000 tick bar time frame when I was trading the E-mini this morning. So, you know, a lot of people, I can only assume we're trying to maybe pick a top in the E-mini this morning and lost a lot of money. If you simply applied the 50-period moving average to any time frame, once we cross above that for 3 consecutive closes, well, then you just look for buy setup. So that's what I did on the 1,000 tick bar chart. I waited for a buy setup in one of our strategies and was able to have one winning trade. After that, I had to quit my trading in order to put this presentation together. Let's see. Would you? Terry asks, would you show us specifically how to add the 50-period simple moving average on Thinkorswim? Also, when you change the time frame, 15 minutes versus 1 year, etc., will that make a difference? Hi, Terry. Well, you know, Terry, I'm sorry. I don't have Thinkorswim available right now. Or actually, this is just a PowerPoint presentation. I don't even have my charting software plotted, but it shouldn't be very difficult. In fact, this is more of a technical issue for your charting software program. So just ask them to help you how to plot a 50-period moving average. But it's extremely simple. I think where most people get confused is that they don't understand what a 50-period means. So in other words, if you're looking at daily bars, it just constructs a moving average based off of the last 50 days. If you're looking at if you are looking at 5-minute bars, well, it constructs a moving average based off of the last 55-minute chart or 5-minute bars. It's really simple, but they would be the people to contact, your charting software technical support. Okay, Terry? Let's see. Let me see if I hear Lori is asking, but you show only the best examples and the trading range. Well, the thing with I'm showing you examples just to show you how it works, okay? But I stated at the very beginning of the presentation, is this 100% foolproof? No, it is not. I think I stated that once or twice in today's presentation. I'm really trying to teach you how to use this and apply this and have you do the work on your own. Remember, we're about teaching you this and then having you do the research. So that's why I gave you that homework assignment saying go back and look at your trades. If you're not convinced after that, after your past year's trades, well then, okay, this technique is not for you. But guess what? You didn't spend any money. It didn't take a lot of time and effort on your part. So that's great. If you want to continue trading the way you are and hopefully you'll get good results, well, that's great. I'm not going to stand in the way of anyone. But if you've been trading and you're not getting the kind of results you want, I really feel confident that our techniques and our strategies will help get you over that edge and help get you on that road to consistency. So go ahead and use it on any time frame, in any direction, and in any market, and see when you get some type of a signal if it really could have helped you this past year. Okay? Earl asks, does this work on TradeStation? Yes, Earl, it does. I use PET-D as strategy, all of our strategies on TradeStation. It works extremely well. One of the things I want to mention is that the PET-D and strategy number 4 applications work on TradeStation, they work on Metastock, they work on MT4, and they work on NinjaTrader. Okay, so if you have any of those platforms, you can apply these directly and they'll work great. Now, if you have Thinkorswim, you can also use these techniques, these platforms, but there's a slight edit or alteration you have to do, and the people at Pro Trader Strategies can help you with that. Okay. Samson asks, how do we get the PET-D tool? Well, the PET-D is it's a link, it's an add-on, I should say, that is shared that we give to you. It's a proprietary add-on that we give to you that you simply upload to your charting software package. It's that simple. And once again, Pro Trader Strategies has a great tech support system. So they have people here that they can walk you through the process. We have people that will even call you up and help you set up all of this on your computer for you, okay? So it's really a great, in fact, over the holidays, there were people emailing me with some tech support questions, and I just forwarded them to the tech support people over the holidays during Christmas vacation, and they had people setting up so they could review PET-D and Strategy 4. So it's really a great service. Alan asks, apart from the math, what is the verbal basis for the PET-D principles? Alan, the only thing we can share with you, because it is a proprietary tool, is that it's based off momentum. It is not in any way based off of volume. It's not based off of moving average crossovers. It's not based off of some high-low oscillator calculations that are based off of a higher time frame. I know a lot of people have told us these things. It's not. It's just based off of momentum. It's a proprietary formula that I was introduced to, and that you can calculate it by hand. But if you're trading 1,000 tick bar charts, it's a little difficult to do every 1,000 ticks. So it makes it so simple when it's automatically done for you by coloring the bars either green for a short-term uptrend or red for a short-term downtrend. Now, here's one question that most people ask. They say, well, do these color bars, do they repaint? In other words, do they optimize themselves going forward? No, they do not. In other words, once a bar has closed, if it closed at that time frame and it was colored green, it will stay green. It does not change anymore. So it's not going to re-optimize itself and change walking forward conditions. All right, so don't worry about that. Now, while the bar is still open, meaning let's say you're looking at a 10-minute time frame, okay, intraday trading, and you have the PET-D applied, well, it can change back and forth from red to green while the bar is still waiting to be completed. But once it is completed, it will stay at that color. Now, having said that, it very rarely goes back and forth, even on an intraday basis, back red, green, red, green. It's most likely, once its calculation kicks in that it's into an uptrend, a short-term uptrend, it will most likely stay at that color, okay? I hope that answers your question. Let me see here. Michael asks, is there a cost for Metastock? Well, Metastock, yeah, in order to get the platform, I believe there is a small fee, but I believe they may even have some specials or even discounts where you can get the platform at a lower rate. But I would ask Pro Trader Strategies once again and the tech support people there. They can set you up really simply with that. But it works great on Metastock as well. Michael asked what platforms will they work with. Yes, they work with Metastock, NinjaTrader, TradeStation, and MT4. BM asks or states, you sometimes say to enter 1 bar above or 1 bar below, and other times you say enter 3 bars above or 3 bars below. Can you clarify? Well, I think you're confusing an actual entry technique, which we call our confirmation technique, with changing of trend. In other words, when you get a setup such as I showed you, that first green bar, all right, if the overall trend is up, we know that we're waiting for a bar to turn green. That first green bar that turns green, well, that's your setup for a short-term entry, all right? Now, if you're waiting to see, let's say you have a series of red bars, okay? And if you're only looking at the short-term trend, now you're not applying the 50-period moving average, because we have a lot of traders that say, you know, Steve, since I'm in and out in 10 minutes, I don't need really to use the 50-period. I just use the PET-D because it works that well. Okay, well, if you're going to trade that way, well, then you need to see 3 bars of a different color to tell you that the trend has changed. So it all depends on what intensity level you want to be trading at. If you're more conservative, you will use the 50-period along with the PET-D, and you'll only wait for 1 green bar or 1 red bar to tell you to get back in. If you're trading very aggressively and only applying the PET-D, you need 3 bars to tell you that the trend has changed. Okay? I just can't give a lot more information because then I'll start talking about some of our techniques and strategies, and that wouldn't be fair. Giving away all the rules for the people that have spent thousands of dollars for already that are members. Okay, but I hope that explains it. Roxy, hi Roxy. Roxy's a student. Roxy says, does PET-D work with strategy 3A? That's a great question. You know, it can work with strategy 3A, but I think it's better applied as an exiting tool for 3A, not so much an entry tool. Remember, the PET-D is just a tool telling you confirmation or the short-term direction. But it doesn't mean you have to always use it for entry. Sometimes it's used as a great exiting tool as well. So the reason is because the strategy 3A, which is something totally different, is more of a pullback technique. And the way it is constructed, you may be buying on the lows of an uptrend. And so the bar may not turn green yet. So this is probably a question you may want to email me about, Roxy, but it can work with any strategy we have. It just fits some scenarios better than others, okay? Winston says, if you are trading with the 50-period and the price break the 50, how many bars or candles should you be before getting out? Okay, that's a great question. Well, first of all, you should rely more on your stop than anything else. And we teach you upwards of 7 different stop placements in our courses. So, but if you do not have a stop that that has been stopped out yet, I would say, this is once again a personal choice because you ultimately should be making the decisions, not us. But we just share with you different techniques, and I would say if you get anywhere from 2 to 3 closes below, you should definitely be out of the trade. If you're long, you should be out. But most likely with all of our scenarios, you will be out before that. Okay? Either you will use one of our conservative techniques to move your stop to unchanged, or your stop is going to be above that level. You're not going to really have to wait for 3 closes below the 50-period to wait to get out. You should have a stop if you're using our techniques that had you out well before that. Okay? I hope that answers your question. Fred asks, to what extent do you consider, say, the 50-period moving average or SPX in determining trading a stock? Well, to what extent do I use 50-period of the SPX? I use it tremendously. In other words, if you're saying on using that as your guideline to tell you the overall trend, I personally only look at the chart I'm trading. So in other words, even if the S&P is below the 50-period moving average, as it is now. If I'm really interested in a stock and it's above its 50-period and I get a setup, I will take the trade, because that's, once again, how I personally will trade. Now, is this the way you should trade? No. Is this the way we want you to trade? No, it's not our philosophy. Our philosophy is that you should never mimic anyone else's trading. So we present you with all the facts, all the different scenarios, and then leave it up to you to decide. But we're there with you every step of the way. We don't just simply say, good luck. We're there with you trying to figure out what best works for you. Now, having said that, there are a number of traders who say, well, I want to be in sync with the overall time frame or the index itself. So if the index is below the 50, some traders will say, I'm either out of the market, it doesn't matter what the stock is, or I'm looking for short setups in all different stocks. Once again, there's nothing wrong with that. It's totally up to you. I personally just trade the chart I'm trading, and I don't rely on what the index or the higher time frame is doing. May I install the PET-D on Thinkorswim or interactive broker platforms? Well, I see here, Jose, I believe they may have answered that. You can use Thinkorswim or interactive data for free and can hook it up for free using NinjaTrader. You use the PET-D. Once again, this is the alteration I spoke about. So you basically be using their data, but with that data, you have to get a NinjaTrader platform. But guess what? The good news is that comes for free. So you get that totally free. And on the NinjaTrader, which is a great platform in and of itself, that's where you'll be able to use the PET-D and the strategy number 4. So don't worry, there is a way to use it. Jay says, this works well in trending markets, but what about choppy or consolidating markets? Well, actually, it works well in those markets because it keeps you out of them many times. Once again, I'm not going to promise you that it will 100% keep you out of choppy markets. That's, the price of doing business. But because of the way markets are constructed, when there's a choppy market, price usually bounces above and below the 50-period moving average. All right. Remember, we need at least 3 closes above to tell us to look for buy setups. We need at least 3 closes below to look for sell setups. If we're bouncing back and forth, well, there's just not enough, room there to give us any time to look for any setups. So therefore, we're out of the market. So this is where this technique really helps. And it's the same way with the PET-D. In choppy markets, you'll have a couple of bars green, a couple of bars red, back and forth. And so if you're using an aggressive technique with that, it will keep you out of any type of setup because you won't see a setup. Remember, these are not trading systems or strategies. They're simply great tools for getting you in sync. You still need structure. You still need some type of plan or some type of setup. But that's the beauty of strategy number 4. Once these 2 tools, the 50-period moving average and the PET-D, come together, then you look for a proper setup, proper structure, and that's where the strategy number 4 comes into play. Okay, just time for a few more questions here. We're just about the hour's over. Let's see, does the PET-D work on Thinkorswim? Yes, we answer that. It works on TradeStation as well. Wilson says, I have been looking for the Forex signals. It looks like you support most of the time on stocks. I am trading Forex. Well, Wilson, I just showed you some great examples with the Canadian dollar and the British pound, and these work great. Okay, so in fact, if you look at the Australian dollar, the entire last part of last year coming into this year, it's been in a very strong downtrend. It has had nothing but great sell signals generated in the Australian dollar using the PET-D and strategy number 4. Okay, so that's all I can tell you. It does not matter what market we're looking at. These work really, really well. Okay, so it works well on stocks, Forex, and futures. A few more questions. Dave asks, hi Steve, what programs will this work with? Okay, once again, this works with TradeStation, MT4, Metastock, and NinjaTrader, and you can also apply it with a small alteration by using with Thinkorswim. Okay, Alexander says 3 closes should be in one or direction, 3 buy close candles, or could it be 1 buy close and 2 sell close candles? First of all, it doesn't matter whether you were using candles. The candles have nothing to do with this. You can apply candlesticks, that's fine, but the candles does not dictate whether we're buying or selling. All we're saying is if for a trend to be in place with the overall trend, which is the 50-period moving average, we should have 3 closes. It doesn't matter if they're lower or higher than one another, but you should have 3 closes either above or below the 50-period. All right? Now, if you're just trading the aggressive pet D, meaning that you're not relying on the 50-period, well, then you want to just see 3 green bars or 3 red bars. We don't care what price the closes are. Okay? And please remember, these are just trend identifiers. But the most important thing, as we started the presentation with, how do you trade in sync with the trend? Where is price in sync with the trend? And that's what we've just given you, 2 great techniques for getting in sync, because that's half the battle right there. If you're in sync with the trend, you've already added a very high level of consistency to your trading. The trouble is most people have a different idea of what the trend is. We feel that the 50-period as well as the pet D are tremendous tools for getting you in sync with the trend. Once again, go to your last year's trades and use the 50-period. Every time you had a buy signal, it should have been above the 50. Every time you had a sell signal, it should have been below the 50. If it were not, then you're out of sync with the trend, and most likely you had a losing trade. Okay? Well, this is one of our new customers, Joseph. Hello, Joseph. Steve, this is Joseph. Today I had another 100% profitable trade. I had a 3-point to 5-point and 4-point trading E-mini 10-minute chart. Great trading today. I'm very happy with this package. Love it. 2 days in a row. Thank you very much. This is JN, one of our best traders. He's just been with us for 2 days, and he's already racked up 100% profitability in just the last couple of days. And he's not been solicited at all. He's a brand new student of ours, and I want to welcome him. But please remember, as we tell all of our students, they work tremendously when you are in sync and when you understand the process. But this is an educational course. We're not going to sit here and guarantee that every day is going to be like this. Do I lose trading someday? Yes, it's just natural. The point is, you don't want to do what most traders do, which is go into these large slumps where nothing works anymore. And so that's what we provide you with. Trading techniques, tools, and strategies that have a high level of consistency so that when they do not tend to work for a short period of time, at least you don't give away all of your account. You're basically having 2 steps forward, 1 step back. That's what we're trying to instill in you. We're not going to promise you like some other traders and educators do, saying, oh, you'll make $1,000% a month, and you'll be supporting yourself in the next 6 weeks. I would run away from anyone who says that. What we can tell you is that we're doing our best to be there with you every step of the way. We're more of a mentoring course than anything else. And we're sharing with you the same things that I use and the same things that turn my trading around, okay? I'm a trader first as well. I wouldn't want someone to sell me a bag of goods here that didn't work, and sadly, I've done that. When I was struggling, I was spending thousands of dollars on things, hoping for them to make me successful. It wasn't until my mentors told me that I have to empower myself. I have to make my trading simpler. That's when it started to become consistent. So that's what we try to do with all of our students. And I'm happy that JN has done well, okay? Hal asks about the payment plans. That'll be my last question here because I don't want to keep all of you waiting. If you have any more questions, you can contact the people at Pro Trader Strategies, and they will answer anything that you may have asked. But they have a number of payment plans, but you have to contact them, okay? So I can't speak for them because things may have changed since this past year, but I know we are offering payment plans for this 2-for-1 special that we're offering you today. So we realize $19.95 is a great discount, but at the same time, it may be difficult for you to meet in one lump sum. Therefore, we have a payment plan available. Just call them up. There's no obligation. You're not committed, and just to see where you stand. But if you're really serious about turning your trading around in 2015, we really feel this is the way to go. We showed you those real-world testimonials, okay? JN just told you here how well he's done the last couple of days. These are real-world traders here that have just signed up with us. So we're not trying to tell you things that don't work. We're just trying to put consistency back in your trading for 2015. I know as traders, we all start off the year hoping and wishing for the best, but most likely what usually happens is that we're depressed and right back where we started at the end of the year. I really feel confident that if you take that leap of faith and join us as a member, you'll really, this time next year, feel confident about your trading and feel very happy that you made that choice, okay? I want to thank you so much for attending today. I want to thank you so much for listening and becoming a part of our team here, for all of you that are members of Specialist Trading. And I want to wish you all a very happy and prosperous new year. Thank you so much, and we shall see you next time. Bye-bye.